Hello traders, this is Debraj from DRM Trade Talk. Today I'm going to discuss a very simple entry technique with you guys uh, because I think entry in Forex or any trading market is very important. So I got many mm, like questions from traders that like they are confident about their strike zone, they're confident about their supply or demand zone, but still they're not confident about when they do enter into the market. So this is common problem of traders. They find difficulties to find out like when is the right time to enter into the market. Some uses RSI, some uses Bollinger Band, some uses uh, MACD. So you might be using these indicators for entering into the market also. But what I have seen from past experience, uh, I follow simple market structure, which I think I would not say this is the best technique to enter, but I do like that, and I wanted to share this with you today. And I don't want you to change your existing entry technique if you are getting success with RSI or MACD or whatever system you're using for your entry. If it's clicking for you, so please don't change that, but you can just see this method what I'm going to teach you today. So this is so let's start the thing. Let's get into this topic. uh, Say you have already found out a very good zone, very good demand zone, or very good support level where you are waiting for the price to come and you want to enter. Say from higher time frame H4 or H1 or D1, you have found out a very good zone or very good support level or very good demand zone to buy the market, or you have found a very good supply zone to sell the market. You might be a trend trader or you might be a reversal trader, that doesn't matter. So your higher time frame is saying, say this is the area I wanted to buy, for example. So say this is the area. Uh, so price is now going to come and you wanted to buy in this zone. This is the demand zone or support level. So you wanted to buy in this zone. So what I do normally, I use lower time frame structure break to enter into the market. What do I mean by that lower time frame structure break? We have two patterns I use normally. One is breaker and other one is mitigation. So in today's video, I would be explaining about breaker, and next video I'll be coming up with mitigation. So say this is your zone. So what is a breaker? Remember, we will use this breaker in lower time frame. High time frame, you have done your all analysis, D1, weekly, whatever you do your analysis, fundamentals, technical, whatever you have done is complete. Now you're sure, you're waiting for the price to come to your zone and you want to pull the trigger. But when is the correct time to pull the trigger? That's what I'm going to discuss today. So we want to discuss about breakers. What is a breaker? Breaker is a market structure break. I would want to see. Say this is your zone and you're waiting for the price to come back to your zone. So price is making lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Price is in your zone. So when you want to pull the trigger, when you want to buy, I would wait for the price. Remember, this thing we are doing in lower time frame. If you have marked up your demand zone or support level in H4, so I would be looking for this breaker in M15. So see now what happened. Price is making lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low in low time frame in M15, and suddenly they broke the structure. So this is the breaker. This area is the breaker. When market breaks a structure in lower time frame, that's an extra confirmation that momentum is with us. We wanted to buy from this zone, and now we wanted to buy the market from this zone because of our higher time frame analysis. And now from lower time frame also, I was waiting for some structure break. I want the price to show us some bullish movement in lower time frame as well. That's what I was waiting for, this pattern. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And now you see price is not making lower low and lower high. Instead, price broke the structure. So this area is, for me, this is breaker. This is our breaker. Okay. Next, once I get this breaker, what I'll do? Now I have two options to enter into the market. After seeing the breaker, I may go for a long. When the price retests this breaker, I may trigger my buy. This is one entry we can do. And other entry we can do is we can wait for the price to come back to our discount zone. So if you don't know what is a discount zone and what is a premium zone, let me tell you very briefly. This is a swing low, swing high. We have a swing low here. We have a swing high here. Now, if I want to buy in this swing low to swing high, then I will be waiting my Fibonacci from this swing low to swing high, and anything below 50%, anything below 50% is my discount zone. If I am buying, this is my discount zone, and anything above 50% is my premium zone for sell if I'm in a sell market. But this is, we are in a bullish move market, so I want the price to come back to at least my discount zone so that I get cheaper price to buy, because we always want to buy low and sell high. So I want the price to come back to our discounted zone, and then I want to buy. So this is discounted zone below 50. So now let's come back to this scenario. So one entry can be, aggressive traders can enter when the market is retesting this breaker on lower time frame. Remember, we are doing all these things in lower time frame. One entry. And other entry is also, you can wait for the price to come to your discounted zone and then buy. So if I mark my Fibonacci from this swing low to swing high, you see below this is my discounted zone. Everything below 50% is my discounted zone. This is my discounted zone, and in this discounted zone I wanted to buy for conservative traders. But for aggressive traders, they can buy from the breaker retest, and conservative traders, they can wait for the price to come back to discounted zone and they can buy. So this is it actually. This is the theory what I'm going to discuss in lower time frame. You can enter like that. Let's quickly see few examples. Say this is the USD JPY. For example, you have already marked your area, this area, as a good supply, good demand zone. For example, you have marked this area as a very good demand zone. and you haven't seen the market. We don't know yet. We don't know yet what will be happening in future. So let's play this market in replay mode and let's check what I was trying to discuss in this theory. Okay, let's start. See, price is moving, price is coming to our area, price is creating lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Notice price has hit our level, but I'm not triggering the buy yet because I am waiting for the breaker. I am waiting for the market to tell us that I am breaking the structure and I'm going bullish. I want the market to tell. See, we don't want an indicator because a chart is in front of you. Why do you need an indicator? Say something is happening in UK and you are in US. So you don't know what is happening in UK. So that's why we use news channel media to know that what is happening in UK. Correct? But you are in front of your chart. You don't want anything to tell you what is happening inside the chart. You can see the price action and you yourself can determine what is happening inside the chart. So I believe we don't need any indicator. Yes, but yeah, few cases we may need indicator. But most of the cases, price will tell you the story. So now I'm seeing price is making lower high, lower low, lower high, lower low. It hits our level, but I'm not entering now because I want to see a market structure break in lower time frame. Say this was your higher time frame, the zone, higher time frame support. Price is here now. So, but I am not going to enter because I am waiting for the breaker. Give me breaker. Give me a breaker. Let's see. Yes. Did you see that? I got a breaker. You see that? I got a breaker. This is my breaker. Price was coming lower high, lower low, lower high, lower low, but now price is not making a lower low. Price broke the structure in lower time frame, M15. And this was maybe my H4 support level. So now I got the breaker, and next, what you know, the aggressive trader can wait for the breaker retest and long. Now I'm waiting for the price to retest this. Let's wait. Let's see. Yes, it retested. It retested my breaker. So I can enter from here, long. I can enter here from long and see what happened after that. Boom. So this is the only entry technique I was going to tell you in today's lesson, that how I use entries. But yeah, there are a lot of things I teach to my students that, see, normally remember, main thing is in the market is liquidity. If you can identify where the market is going to go, then it will be very, very easy to hold the trades like a shark. Be a shark in the market, follow the big money. You should be knowing when you are entering into this market, this buy trade, you should be knowing that where you are going, where can be the most liquid. Because if I'll tell you my buy model, I know that there's a consolidation here, there is a going to support level, this is my smart money reversal, this is the reaccumulation, and this is the clearance. This is a complete buy model I teach to my students. But we'll discuss those things later, maybe next videos. But I wanted to discuss this breaker today, and next time I'll be discussing mitigation. So one important thing is, again, breaker is higher time frame supply or demand zone. Then you wait for the lower time frame, mark your higher time frame supply demand zone or support resistance level, then wait for the lower time frame breaker. This is a buy side, this is a buy breaker, bullish breaker. Similar for, this is the bullish breaker. You have already seen this is a bullish breaker, and similar way you can also see, look for bearish breaker. Price was going up, going up, going up, lower time frame. Always remember, break the structure, come here, boom. This is your bearish breaker. This is your bearish breaker. This is your bullish breaker. Boom. This is bullish breaker, this is bearish breaker. So try to use these lower time frame structure breakers, which will give you very good success or very good performance, because I have seen from my past 5 years experience in Forex, in futures, I have seen this really works, because this has a logic also, this breaker, why? Try to understand the logic. They are stopping out. They are stopping out because when you understand external range liquidity and internal range liquidity, those are different concepts. When you understand that, see, try to understand why price moves like this. Why price go like this, it goes above this high, and why price comes back, and again why price goes above this swing high, because there is external range liquidity. That's why price goes above to take this liquidity, and once they'll take this liquidity, it comes back. So similarly, when the price is coming down, why they come below this liquidity? Because there is external range liquidity, and they comes below the external range liquidity, and again they comes back, the price comes back. So why I'm saying this breaker has got a logic. If you see, they're coming to take this liquidity, okay, they're coming to take this external range liquidity, and now after taking that, maybe they're stopping out somebody here, some guys, they're stopping out some buyers and sell stop liquidities. Price is going up and broke the structure. So that means they prove that, okay, the market is going to be bullish in lower time frame also. So that's actually, that was it for the day. So if you can see this example one more time, you'll see that how the breaker worked. Every time it works actually. If you can find out your high time frame and then lower time frame breaker, high time frame supply demand zone, support resistance level, and lower time frame breaker, it will work. You can add any indicator on top of this also to find out divergence or whatever. Say, for example, I can just quickly add an indicator, maybe for more confirmation if you want. Say Bollinger Band BB. I like this indicator. If you can see in this area, okay, yeah, you're seeing that we are getting a divergence also. When the price is creating this lower low before the breaker, it is also giving you a divergence, and you're getting this breaker. So this is a very good confirmation that you're getting also divergence in price. Momentum is leading. Price is, what is divergence? Price is going below, but the momentum is telling you price is going to go up. So you're getting this divergence and then the breaker, then wait for the retest, and boom. But the main important thing, you must be knowing that why you are trading this and what is where you are going, where the price is going. Try to follow the big money. So that's it for the day. And I also wanted to tell you that this is my channel. I have already given the link in the YouTube description, so you can see that how we trade every week. This is last week's trade. You can see how we have traded USD CAD, Euro CAD, those things. So I give also, I post my setups in my channel. This free channel. If you want, you can join this channel and you can see what I am giving, the trades I'm giving here. And I have also a paid channel. We have many, like few members, 45 members we have, and we talk and we trade. So I have a course also, but I'm not here to sell the course yet. But yes, you can, if you want, you can be a part of this course, because we have a course and I teach my students. We have a small group. So this is what I wanted to discuss also today about my group. And if you want to follow me, follow my signals, or follow my setups here, you can also join the channel given in the description of this YouTube video. So I hope you are clear with the breaker, with the lower time frame entry technique. So stay blessed and have a nice week. Bye bye.